So for more on how a port strike could impact retailers, let's bring in Storch Advisors CEO Gerald Storch. He's also the former vice chairman of Target and the former CEO of Toys R Us. Jerry, happy holidays. Good to see you.
Thank you.
So, Jerry, I've been talking to some of the biggest logistics companies. They're telling me big retailers like a Walmart and a Costco, they're shifting over to the West Coast ports. They're also bringing things in early to try to mitigate a port strike. So I want to ask you, besides their 1 or 2 week strike, when will we start to see the impact when it comes to these major retailers? What are the signs for investors that it's having a negative impact?
Well, certainly it's going to be a lower impact, whatever happens, than it would have been last fall. This is a pretty low volume time of the year when you put it in perspective. And, you know, frankly, the retailers didn't do too well. They don't mind if it's a little bit delayed because they might have too much inventory already. But the strong retailers, as you pointed out, they pulled forward inventory. They saw this coming, months away, and they shifted to other ports, other modes, and in some cases to air freight where that made more sense. So it really shouldn't be a drag on business right away. Hopefully the whole situation won't drag on too long. Obviously, if it does, costs will increase. And you'll have some shortages. There are things you just can't bring in early. The famous example of bananas, where how long can you store a banana? And certainly there are problems for automobiles coming from Europe into the East Coast ports. So eventually it could become a problem. But smarter retailers don't just put this in its own category. They put it together with, look, the threat of wars. Look what's going on in the Red Sea with the Houthis, tariffs, and all the uncertainty that provides. The pandemic, you mentioned that earlier. So there are so many issues with supply chains that the old thinking that just in time was best has been thrown out the window. And people are saying, let's build flexibility into our system. And that's what the best retailers have already done. So they should be able to handle this unless it just drags on for a month or longer.
All right. So you're saying that they're able to handle it logistically, but what about their financials? I mean, what about a margin impact? What about EPS impact? When we talk about shifting supply chains, that costs money. When we talk about holding inventory longer by pulling ahead, that's a higher carrying cost. So how do you see that impacting these retailers when it comes to earnings after the holiday season?
Well, you're right. It's something. But in the broader scheme of things, I just don't feel that it's a red. It's a yellow type thing. Green, red, yellow, red. This is yellow right now. It's not red. I think they have much bigger issues. The winners and the losers here in retail are pretty stark. And the people who are winning by so much. And the people that are losing by so much that they're still going to be winners and losers.
Jerry, one of my favorite stats of the day was from Bespoke, where they said that the most correlated stock to Apple in the S&P 500 over the last year has been TJX. And I wonder what you think that says about the state of retail right now.
Look, there are some, people say, oh, the consumer had a good holiday. Okay, all boats did not float. For over a year now, I've been recommending 4 companies as being best on strategy and best run. They're Walmart, TJX, which you just mentioned, Costco, and Amazon. And they have just done phenomenally, both in the stock market and in terms of gaining market share. And frankly, I think that's what's going to continue. Retail doesn't change that fast. The consumer doesn't change that fast. They love those companies just as much as they hate some of the more traditional retailers like department stores or some of the aging apparel chains.
So is the fate of department stores just over? Can they turn it around? I mean, this has been a year of many headlines in the department store world. Macy's closing stores amidst activist pressure. You've got Nordstrom family taking the company private again. I mean, is there a light at the end of the tunnel here, or is the business model just over?
Well, the way they're running it right now, I don't think it's going to work. The change just isn't significant enough to resonate with consumers, particularly younger consumers. Look, your mother or your grandmother may still love shopping at department stores, but you don't, and your children won't. And, that's what's going on right now. It's almost a generational shift. To change it, they have to totally change how they do business, become a much more desirable place to shop. And, people might say, oh, look, Walmart and Costco, those stocks are way the heck up. I can't buy those. Would you rather buy the stock of a company that's mired in strategic disarray and operational weakness? I don't think that's a very good bet either. So I think there's a tough road to hoe for the retailers that have been losing share. And I wouldn't put my money with any of them, whether it's, Costco, or I'm sorry, whether it's Kohl's, Costco I love, whether it's Kohl's, or whether or not it's Macy's, whether it's anyone in that bracket.